Moving on to the second part of your third module, which is illustrating the importance of cost analysis. So as we know that both factor, production and cost, which are associated. When a manufacturer is manufacturing something or creating some physical output or services, it incurring some cost or some sacrifices or some money factor which is going out of his organization. So cost is the amount incurred for manufacturing or its allied activity. Is the amount incurred for manufacturing and its allied activity. Allied means the term indicating related, connected or associated. So sometimes it can be a broad meaning. That is a broad meaning. It can be the sacrifice of time, effort or money factor from the enterprises for the purpose of generating a valuable output. That can be goods or services. The sacrifice of your time, money as well as energy factor which is neglected or sacrificed for the purpose of creating a physical product or services which have value in the organization. So the cost concept can be variety. Maybe you heard it from your graduate level onwards. There are so many cost concepts are there. For example, real cost, opportunity cost, sunk cost, historical cost, market cost, period cost. There are so many cost concepts are there. But in economic sense, as a part of explaining about cost and output relationship, we require some elements of cost which have practical importance. The costs which are associating with the practical importance in the business organization or business deciding models. That cost can be, the first thing is about fixed cost. Second thing is variable cost. Third thing is total cost. The next thing is that marginal cost. The last one is that average cost. These cost parameters are important regarding the business decision making process or business deciding models. Once again, the fixed cost, variable cost, total cost, marginal cost and average cost. These 5 cost parameters are important regarding the business decision making process or think about your business purpose like cost minimization as well as revenue maximization. So we are believing on the principles of profit maximizing or wealth maximizing. So how to maximize the profit? It is by the way of minimizing cost and maximizing revenue. In certain extent, revenue is something like income getting by the way of sales volume. It is uncontrollable. We are not getting a guarantee that we will get this much of sales every month. No, because sales is always uncontrollable. It is in the hands of consumer. But how we can think about minimizing your cost? It is internal within the organization. It is under our control. So how we can minimize the cost? By the way of studying all the 5 cost parameters. So moving on to the first one, fixed cost. The word meaning is very clear. It is fixed in nature. It is always static. It is not dynamic. It is always stable. For example, you are paying salary for the manager. You are giving rent for the building. So all these are fixed in nature. That is what is indicating a straight line. So whatever output we are changing in your output level, there is no change in your cost factor. That is what known as fixed cost. Rent of a building, salary of a manager, you are paying some government taxes. So all these are which is always fixed. The second thing is that variable cost. The variable cost means the cost which is incurred for creating some output which are changing on the basis of volume of output producing. For example, cost of raw material, cost of labor, we are adding some input, cost of some component in the organization. In all these parameters, when we are changing the output, the input is all or the cost is also getting changed. That is what known as variable, dynamic, altering cost. That is what it is giving a increasing figure with corresponding to your output of volume. When the output is increasing, the cost is also getting increased. The third one is the total cost. See, total cost is equal to fixed cost plus variable cost. If you are adding these 2 figures together, we are getting the total cost of production. Fixed cost plus variable is equal to total cost. That is what the third line. See, from the top of fixed cost, it is keep on increasing. When the output is getting increased, the total cost is also getting increased. The first one fixed, second one variable, third one is that total cost. Total cost means fixed cost plus variable cost. The fourth parameter is about cost is that marginal cost. So what is the word meaning marginalism? We already discussed in the first module regarding marginalism. Marginal cost is the, extra cost of producing extra unit. The change in cost by the way of change in your output. It is a cost of producing one more additional unit. So see, think about when you are producing 10 unit, what is the cost of total? For example, 100. When you are producing the 11th unit of output, the cost can be 120, which means this 20 is the extra cost of producing extra unit. So 120 minus 100, that is equal to 20. This 20 is the extra cost of producing extra unit. That is what known as here marginal. So marginal cost is the cost of producing additional unit or total cost of n minus 1. How we are producing an extra unit by the way of an extra cost. That is what marginal. Marginal cost curve is almost like a tick mark. See the tick mark curve indicating initial level the cost can be reduced, then it is keep on increasing by the way of cut down the average cost. The last one is that average cost. Average cost is the cost which is required to produce per unit. That is total cost divided by quantity. How much we are producing divided by number of units. What is the total cost of your production divided by number of units? That is what TC by Q. So these 5 cost curve is important regarding the exam point of view. So the relation is very clear. When we are thinking about average cost, it is giving a U shape. Why it is U shaped? The initial time up to the manufacturing of 5 or 6 unit, it is reducing. So after that, this keep on increasing. For example, if you think about printing of some what I call wedding card or your photographs or some printing materials like notice or brochure. So up to 500 unit, when you are dividing with average cost, is keep on reducing. For example, if you are developing 8 photographs, you may give an amount of 200 rupees or 150 rupees. The average can be rupees 25. When you want to get more photos like 16 or 32 printouts, you want to give more money as an average cost. That is what it is getting a U-shaped cost function. So these 5 cost diagrams are important for the exam point of view. The next analysis is about a cost and output relationship. So how we can explain the cost and output relationship? See here, as I told you earlier, the straight line curve is indicating fixed cost. So whatever you are producing in the organization, we are getting a straight line as fixed. See, total cost and variable cost, which are very positive, which means when we are increasing the output, the variable cost and total cost is keep on increasing. Then the next thing is about average cost and marginal. See, average cost is almost like a U-shaped cost function. See the diagram U, almost a English letter U, where the first level up to 5 unit, it is keep on reducing. From 6 unit onwards, it is getting increased. That is what it is getting a U-shaped cost function. See, whereas marginal cost, it is first it is getting reduced, then after a level of point, it is keep on increasing. That is what it is a tick mark cost curve. So always be very careful about these two functions only, MC and AC, how it is getting related. When average cost is minimum, MC is intersecting on the average cost. MC is touching on AC at AC is minimum. Marginal cost is touching on the average cost where the AC is minimum. That is the conclusion about your cost curve.